My name is Alexis Rogers, and I'm the Customer Relationship Lead here at RightCapital. And I want to welcome you to our webinar today on introducing our new tax analyzer. Now, this is, of course, our biggest product launch of 2025. So I'm excited to be introducing this new tool to you. Tax Analyzer in general is a very powerful and versatile module that we're going to be covering that can provide some key tax planning insights for yourselves as advisors. It can also go a long way when it comes to demystifying conversations with clients surrounding tax planning. So whether we need to review a client's existing tax returns from previous years, dive deeper into some of the projections in the system. Those of you that are avid users of RightCapital, you know we have very comprehensive tax calculations. And so this provides another layer to how you can incorporate RightCapital into your practice. So we are going to be diving into a lot of the different nuances when it comes to leveraging the tax analyzer and what that looks like in practice. So today we are going to be walking through just some of the important assumptions to consider when we're even talking about tax planning and RightCapital. Of course, it's always important to note that it's always important to consult with a CPA or those tax professionals when it comes to more granular aspects, but this is just a visual tool that can assist in the conversation surrounding more tax efficient planning strategies. So we're going to review those different key visuals we can find within the module. And we're also going to be analyzing a couple different strategies that are very popular when it comes to having conversations about tax smarts planning and what that looks like in a client case study today. Of course, as always, we're also going to be reviewing all of the different resources that you do have available to you when leveraging RightCapital. One of those resources being that during this webinar, if you have any questions, please feel free to use the Q&A section and type out your questions there. More than happy to answer any questions that you might have. Now, switching gears into RightCapital, today we are going to be working on a client plan for the Stark Baratheon family. Before we dive into the actual tax analyzer tool and a couple of the assumptions that are important to note, it's first and foremost important to understand what the client that we are working on today looks like in terms of their current path and some of their proposed strategies. So today we are starting the conversation off under the Profile Blueprint section. Here under Profile Blueprint, this is going to be a key visual summary of the client's current plan. To start with, we can see their current net worth is $3.7 million. They have a lot stored in the bank. They have a lot stored in IRAs, tax-deferred assets, and a little bit into a Roth as well. That net worth also includes their primary home and a couple debts. Now, this family is in their late 50s. They're reaching that penalty-free phase, 59 and a half this year. So it's a fantastic opportunity for a couple different things when we're looking at analyzing tax smart planning for this year. And also a couple other things we're going to analyze later on is going to be relevant in terms of their age. So they also have 2 children that are about to be entering college soon. In terms of their goals, we do have a nice vacation goal coming up this year. And we also have the children's college goal starting very shortly as well. Now, this family is avid savers and also avid contributors to charities. So we can see a little bit of a charitable giving goal that is occurring across the client's lifetime until they retire. We also have the clients retiring at age 67 respectively as well. For retirement monthly living expenses, they of course have some nice retirement monthly living expense goals of $9,500 a month. So that's just the baseline for their goals currently. For their income, savings, and expenses, they do have some nice income coming in. Like I said, they are avid savers, and they of course have some nice expenses that we're planning for while they are still working. Now, one thing that's important to note, we can kind of see here that they are higher earners. This is going to play a role to our conversation when we're looking at different tax smart saving strategies and also some of the key visuals we're going to find in the actual tax analyzers. Just noting that here, we can kind of see that straight away. But that takes us to the next point, which is going to be the tax analyzer itself. So under the tax module, we will find our tax analyzer tool. So under tax analyzer, we're going to see a couple different sub-tabs available to us here, starting with our summary visualization. This is where we are going to see, if we have already created an alternative scenario, what the difference is between those 2 scenarios. So I already have a little bit of an idea carved out already for the alternative scenario. Before we dive into the nuances of creating different scenarios and some of the nuances of leveraging Tax Analyzer and the basics of the tool, I wanted to also highlight some of the key assumptions that's going to play a pivotal role in what we are analyzing in this particular tab. So if we first navigate to the gear icon in the upper right-hand corner, under settings, we will find our tax assumptions. So once again, under gear icon, settings, tax assumptions, this is a tab that is specific to each client plan that we are in. And the reason why this is important is because the tax assumptions that we enter here are going to play a role into our tax calculations in RightCapital. So I wanted to review what I'm currently using. This is also something that you can adjust per client, like I said, or for the situation that we're currently in. So right now we are using the tax law of TCJA sunsetting 2025 at the end of this year, which means 2026, it's going to pre-2017 tax law. But from this drop down, we can toggle to the idea of TCJA not sunsetting, which is going to have an impact to the visuals that we will see when we're looking at a lot of the tax analyzer pieces. Same thing if we switched over to 2017 tax law, that would be switching over immediately into that particular conversation. That's going to have a direct impact to a lot of the different brackets that we're going to see throughout the tax tools. And a couple other pieces that are relevant here that I wanted to note for this client plan that's going to contribute to their current path is that we can also indicate carryover values from previous years, including capital loss carryover. This family does have capital loss carryover that we have noted of $5,000. Charitable giving carryover for cash and appreciated assets we can enter here as well. And we also have the ability to capture that AMT, alternative minimum tax credit carry forward as well. So these are just a couple important things to note before we even begin to dive into the nuances of this plan. These are a couple of those specifics that we would enter to each individual client and what we want to specify for this client. Another thing that's going to be important when we do look at the actual increases for the thresholds that we will review in the tax brackets, another assumption that's going to play a role into those projections in the system. This is going to be found under gear icon settings still, but under other assumptions is your tax inflation assumption. So I want to note that I'm using my global assumption, which is 2.5%. This is something that we can customize to the specific client. So if I wanted to make that adjustment, I can use this drop down here. Now the tax inflation assumption will specifically impact that dollar amount that we will see for the actual thresholds each year and what we're assuming that's increasing by. So we will see that impact when we're looking at the projections itself. So these are the baseline assumptions that are important to understand for the client case that we're in currently. This is also something that you can customize per client because everyone's situation is different, of course, including some of those capital carry forwards and other pieces that you will find under gear icon, settings, and other assumptions. So now that we understand the baseline aspect of this client plan, that's the settings and assumptions. The second piece that I wanted to just note very quickly is under profile expenses, and that is what we indicate for this client's tax filing status. So under profile and expenses, we will find that taxes and fees card. I want to note that we are currently considering the clients as married filing jointly, but from the filing status dropdown, you can indicate that they're actually married filing separately and that they are actually not married filing single. So I'm just going to toggle to this very quickly to show some of that comprehensive capability, and that if we have indicated that they are not married filing single or that they're married filing separately, that's going to directly impact what we will see for the projections in general, but especially what we see when you go to tax analyzer. We're now going to see a separation here for client and co-client. So if we have that indicated, that will impact the visuals we see here. That's going to impact the contribution thresholds we're going to be talking about, and a couple other pieces that are important to understand as well. So that does have that pivotability in terms of what we need to analyze within this tool. Now I'm going to go back to profile expenses just to toggle back to the taxes and fees card. I did see there was a lot of people questioning about the different tax filing statuses. So I just wanted to notate that very quickly that you can capture that kind of deviation. If it's not married filing jointly, we can also capture that as well. And you will see those relevant fields populate in the actual tax analyzer tool and also capturing that idea across the projections in general. So once again, that taxes and fees card is found under profile expenses. Now going back to the tax tool, this is where we're going to find, of course, a lot of tax smart specific tools, including our tax analyzer. So tax analyzer, this is where we're greeted with, once again, that summary. So under the summary tab, this is where we will see a key comparison visual once we start to carve out what is happening with our preferred alternative scenario. One thing that I want to note here is that we have two different options for what we can carve out as an alternative scenario and the path that we want to review. So right now what we have selected is we're looking at the projected tax returns. This is going to be looking at our proposed plan and pulling from each of the different years that we can toggle to from here. So right now I'm looking at the projected tax return for the proposed plan for year 2025 for this year. There are a couple other key visuals we can find here, like the ordinary income tax bracket. Especially for right now, we don't have anything carved out. So we can see here just where they currently lie when it comes to ordinary income tax brackets. We can see that they are over that nice 22% tax bracket. Same thing for capital gains tax bracket. We can also see that information from here. So right now they are, of course, a little bit over one of the brackets, which is perfectly fine. But these are some of the visuals we will find here. Further down below is going to be where we can access our action items. And this is where we can start to kind of first test out a couple of the strategies we're going to be employing today. So for 2025, this family is 59 and a half. So they're going to be entering that key phase of their life where they are going to be eligible for, penalty-free distribution. So this might be the opportunity where maybe we're evaluating Roth conversions for this client. With that being said, maybe we're also trying to increase what we are looking at in terms of our deductions. So maybe we're trying to also overcome the itemized deduction or standard deduction hurdle by itemize our deductions. And that's going to include what we are saving for HSA contributions. So we'll see here in the action items just a couple different things available for us to start to carve out in terms of this alternative scenario. Now, there are definitely a lot of other line items that we can propose changes to that we can start to check off by clicking on the edit button here. That will open up a drawer where we'll see a long list here in terms of what we can add in terms of action items for us to be able to propose changes to. So like I said, we're going to be evaluating that idea of kind of distributing from the IRA, maybe doing some Roth conversions and increasing what we have in terms of deduction. So IRA distributions taxable amount, that's line 4B, IRA distributions taxable amount. We have a couple of things that are already pre-selected here for us, which is great. But some of the other things that we wanted to just check off are going to be line 11, gifts by cash or check, line 12, gifts other than cash or check. And then I also just want to check off line 13 for charitable carryover, since we did also have that specified in our assumptions. So once we hit save, all that does is brings those action items into our specific field here to allow for us to start to carve out a proposed alternative strategy here. So now that we've included a couple of those pieces, what we are going to be doing is starting to carve out our different strategy here. So one of the things is increasing our contributions towards, the HSA deduction. They also were evaluating, this for 2025, a specific medical expense. So we're also going to incorporate that as well. So we are going to hit refresh, or we can hit enter on our keyboards, and we'll see how that already starts to impact some of the visuals here. So you can see how that's impacting our federal income taxes. We have $1,200 less as a result of that, $5,000 lower for AGI, $5,000 lower for taxable income, and not anything significant when it comes to deductions yet, which is perfectly fine. So this is where we can start to carve out some of those different strategies. This is really focusing on 2025. We also have the ability for us to analyze previous year's tax returns. And this is one of the key functionalities that's also available, a unique aspect of the tax analyzer tool, which is for us to be able to actually upload returns. So we're going to navigate to the uploaded return section before we dive into some of the other visuals and analysis tools here. Because under uploaded returns, this is where we can upload the previous year's tax return. So for 2023, this is what's going to be the most relevant for this particular tool. When we want to upload a tax return, and this is only something that's going to be available to the advisor, we would select the Upload a Return button. That's going to open up a drawer that allows for us to drag and drop a file here. It is going to have to be a PDF file, and it's going to have to include a 1040, and then you can include additional schedules with that. But the recommendation is it's a PDF file and has a culmination of whatever schedules you wanted to incorporate with a minimum of a 1040. So we can either drag and drop that file, select a file from our computer, or choose to upload from one of these various sources. Once we do upload a tax return here, it is going to be redacting any vital important information. That is going to be something that is, secure in the tax analyzer tool and uploading tax returns. There is that encryption factor we want to consider here. But when we upload a tax return, we will see the status listed here, and there's a couple different statuses we might see. So for the one in the example that I uploaded is a completed status. What this means is that there's no missing schedules based off of what was uploaded for this tax return. If we have two of the other types of statuses, like the unrecognized or something that's incomplete, that is an indicator for incomplete, that there is either something missing from the schedule, a piece of information, or if it's unrecognized, maybe there's a missing schedule as well, or we needed to have a higher quality version of that specific upload. Like I said, it does require a 1040. So if it does not include a 1040 in the PDF, then that would be a reason that it might be saying it's unrecognized. When we do upload a tax return here, it's always recommended we can click into it and start to make adjustments to the specific line items. So if we click into it and say we did get that status that said that there was incomplete information, we can then review what might be missing from that. It'll give a little bit of an error message there to kind of point the way, and you can kind of dive into that. Now, we also have the ability, if we click on the three dots here, to either rename this file or delete this file. Now, this is going to be relevant for federal tax returns. This is not looking at the state level. And if we needed to delete this, we also can click the X button here. So right now, what's supported is the tax return year for 2023. 2024 is still underway. It just started. But it is certainly something that we will be implementing as well in the near future. So right now, just focusing on 2023's tax return year. Once that is uploaded, that then unlocks our ability to start to manipulate some of the figures from that specific tax return when it comes to the analysis side. So going back into the summary tab, if we click on projected tax return, we will now see the option once that is uploaded to look at that uploaded tax return. So that will lock us into looking at that specific one, or if we uploaded multiple. So if somebody was, let's say, married filing separately or not married filing single, and we uploaded 2 tax returns, we can then also toggle between the different ones from here. Now that we've kind of evaluated that kind of nuance when it comes to uploading tax returns and also just different projected tax returns per year, it's important to note that all of the action items we see listed here is unique to whatever we have currently selected. So right now, what I just selected was the uploaded tax return, focusing on a 2023, of course. And what that means is that it's opening up its own unique action items, some of the ones that I already have pre-populated here, and we can start to carve out a strategy. So every time we make an adjustment, we are only impacting that specific tax return for that specific year that we have currently selected. So we can see here just some of the key pieces when it comes to that specific tax return, and we can also start to make adjustments. So maybe we're looking at that idea of Roth conversions, and we wanted to play that idea of us maybe doing more Roth conversions for last year. We wanted to show that impact and say maybe it wasn't a great idea if we did it last year, if that was something the client was evaluating. And this can be that indicator as to why we might not have been recommending that strategy then. Whereas when we're looking at future years, now that the client is in a key age, that might be allowing us to have a different conversation visually. So I'm going to toggle back to projected tax return. And we're going to look at 2025. So we'll see here that the action items are clearly different than the ones I just proposed in the previous tax year. So that's just the example that all of these action items are unique to every single year and to the thing that we have currently selected. So that's saving my HSA deduction proposal and the medical expense proposal as well. So we'll see those visuals here, but that's going to bring us to the next key visual that can go a long way when it comes to defining some of the opportunities that might be available to a client, but also just explaining what might be a better route versus another. So under the thresholds tab, we will see here a couple key thresholds. Some of those items being qualified charitable contribution limits, QCDs, Roth IRA contributions, IRA contributions deductibility for covered spouse, non-covered spouse, student loan interest deduction, TCJA QBI deduction. This is going to be relevant for those tax laws we have selected. So whatever we have selected for tax law is also going to impact what we see here. We'll see AMT exemption, NIT or net investment income tax, American Opportunity Credit, child tax credit, and savers credit. So you will see here a couple of those key thresholds for this year. This opens up the door for us to maybe have additional conversations, or maybe if we were trying to explain to this client, as I noted at the beginning of this session, the clients are already high earners. So they are in that phase of Roth IRA contribution phase outs. So that might be why we're also evaluating Roth conversions later on, instead of trying to contribute now, or maybe we're trying to piece that together with the client. This might be the visual we'll see here, which brings us to the next point when it comes to the visuals we'll see for the thresholds. So we will see a column dedicated to the alternative scenario versus the original scenario. We will see a green dot listed here if the client is qualified for whatever is listed here. So let's take QCDs as that example. We can see that they are still in that phase and they can make that kind of QCD versus the Roth IRA contribution. We see that there's a red symbol here that is indicating we are past that phase out, or in this case, they're not able to contribute to the Roth IRA. We will also see a yellow figure here if the client is either reaching a part of the threshold, so maybe they're just reaching 236,000, so they're partially looking at that idea of a different aspect for Roth contributions. So it's going to be unique to each different scenario we have selected. If we use this toggle, we can toggle to 2026. When we do toggle to 2026, we're going to see a couple other things populate here. Like I said, I am using the assumption that TCJA is sunsetting next year. Since I do have that selected, we'll see a couple other pieces populate from here, which is the itemized deduction phase out and personal exemption phase out. So this allows for us to have further conversations. We will also see that next year, they're also looking at the AMT exemption and they're reaching that middle threshold. Under details, this is where we can see more information and get a little bit more of a granular purview. That's more of a balance sheet formatting of the 1040 for any year that we have selected and for either the projected tax return or our uploaded tax return. This is where we can see the difference between our alternative scenario versus original for the 1040 and those line items. We can also view the Schedule 1 from here and maybe the differences between each of them, and also Schedule A. With that being said, we are going to be evaluating the idea of looking at QCDs when it's relevant for the client. So this particular client is not going to be tapping into or being forced to take a required minimum distribution until age 75, which for them is going to be past 2040. So we're going to be looking at the tax year for 2041. And we're going to be creating a little bit of an alternative scenario here where we have them, instead of just taking RMDs, looking at the idea of making that qualified charitable distribution from the IRA. So going into the summary and the action items, this is where we'll see a couple of those key pieces from here. Once again, we're going to see every single action item is unique to that specific year, which means that if we're trying to include specific pieces, we want to click on the edit button to then check off what we want to include from here. So we'll make those selections, including line 4B, IRA distribution taxable amount. We can also just check off some of the different line items when it comes to the contributions, hit save, and we'll see those populate for us to start to carve out into. So we can see here for line 4B for IRA distributions, that taxable amount, it's 224,000. So let's say we are evaluating making a QCD for that specific year of, say, 125,000. We can either type that into the field or use a slider to toggle to that specific field. Same thing, we can also see some of those medical expenses kicking on. So maybe we're also looking at some different ideas and also looking at the idea of making charitable contributions. So let's say we also want to make outside charitable contributions with just surplus cash flow for that specific year. We can enter that number here and hit refresh. And we'll start to see how that's impacting the key visuals listed here. So you can see that with this particular strategy, with us employing a QCD strategy and also just saving a little bit or contributing a little bit to charity, we have $32,000 less in federal income taxes and $99,000 lower AGI. Our taxable income is $106,000 lower, and we have $7,835 more in deductions. So this is going to be considering that strategy I just selected. We can also see the difference of ordinary income tax brackets, and we can see how vastly different these two situations are. You will see the ability to toggle to different tax brackets. So if we were maybe reaching 33%, we can also toggle that to just provide that additional visual. Same thing for capital gains tax bracket. We can see where we're falling there. Not too much of a difference there, which is not surprising. And once again, under details, we can see that kind of balance sheet difference. If we're trying to truly break down what are the line item differences between our alternative scenario versus original, we can see where we start to stray from those different strategies, and also that impact when it comes to total taxes. So this allows for us to maybe have that conversation about the actual breakdown. We can see that how when we do reduce one item, that does trickle down in terms of reducing our total income. That then also is having an additional impact because we were contributing a little bit more to charity, to the different deductions, and how that impacts taxable income and then impacts taxes and so on and so forth. So this allows for that kind of more in-depth conversation. For Schedule 1, we can also see any differences that are relevant from here. Same thing for Schedule A. So this is really where we're going to see that difference of the charitable contribution, because you can see that gifts by cash or check that we just specified, and how that will have the determination of our total itemized deductions, very different than the original. So this is specific to 2041. So whenever we hit the refresh button, we are saving that as our strategy. But if we ever wanted to reset this proposed strategy, or reset all of our strategies, since each year has its own specific action items, we do have the option at the very bottom of action items to hit the reset button. When we hit the reset button, that will then allow for us to either reset the selected year's action items back to the original ones, or reset all years. So I see a question about somebody wanting to reset some of the different things they were testing across a couple years. That is something that we can accomplish with resetting the action items as needed. So if I said reset all years and hit confirm, it would reset all of them back to the original and allow for us to start from scratch. Now, with what we just specified from here, this is really a standalone tool that allows for us to have more enhanced conversations surrounding tax analysis, especially when we're trying to get more granular when it comes to what we are presenting in the specific tool. When it comes to reporting on the specific module, there are a couple key pieces that we can find when it comes to enhancing the conversations in general, both in the thresholds piece, but also in the details piece as well. Now, I see we have a lot of people already familiar with our tax estimate. So we will see that they are a little bit similar when it comes to the information we are seeing when it comes to the balance sheet. So you still can leverage the tax estimate. This is a different purview under details when it comes to the visual analysis of the 1040 and a couple of the various schedules. So if we're trying to look at a different reference point of other specific parameters of the plan, we can still reference the cash flows, the tax estimate tool, to enhance our strategies for Tax Analyzer. But the Tax Analyzer tool itself is a standalone module. This is really isolating either the projected tax return pulling from proposed plan, or the previous year's tax return, to allow us to do a deeper dive into what would happen if maybe 2023's tax return was straying from what we had originally indicated. When it comes to generating PDF reports, if we go to the gear icon report section, we will find under the tax section here that the Tax Analyzer is available for us to include in the PDF report. With this new tool, you will see that this is one of those items that are underlined for the PDF report. That's that indicator that we can click into it for more functionality. So this allows for us to be further refined in terms of what we are selecting to include in this PDF report. So if we were only trying to isolate the thresholds for this client conversation and the action items, we can select those. Or maybe we're just trying to cover thresholds, we can make that selection. This is also something that we can rearrange by dragging and dropping if desired. Maybe we want to first cover action items before toggling to some of the visuals and hit done. And then we will be able to download those selected pages into a PDF report.